come to this particular question. This is one of the past examination question, a very good quality question, and many students fail to understand. However, I have increased the difficulty level of this question. I have modified the question and I have increased the difficulty level. Okay, so in exam, if it was for 10 marks, now it should be 16 marks because I have done modification to the question. Okay, now see, first of all, in this particular question, there is a firm, authorized dealer of watches. Net profit as per P&L has been given to me after debit credits of the following items. Okay, and all these adjustment 1, 2, 3, 4, 5, 6 additional information, all that everything is given. Then at the bottom they are saying that you are required to compute total income of the firm applying regular provisions and the presumptive provisions contained in section 44 AD. So you have to do both the ways computation by applying 44 AD provision also and normal provisions also, both the ways that you have to do that, and then you have to advise on the procedural aspect if at all you are required to do that particular thing, and you have to also suitably give advice to the assessing officer in relation to income adjustments in passing the orders. So you have to think both the ways. You have to think from the officer, that means additions point of view, and you have to think from the assessee point of view also. So you have to do the computation both the ways. Okay, now first of all I will do 44 AD. So for 44 AD I have to straight away go and pick up first of all the turnover criteria. Total turnover is 80 lakhs. Cash is 20 lakhs. Okay, amount realized by cash 20 lakhs and the balance through credit card, RTGS, NEFT and all that. Okay, so your total turnover is how much? 80 lakhs. Listen very carefully. So I will say 20 lakhs into 8%, 60 lakhs into 6%, 1.6 lakhs, 3.6 lakhs, 5.2 lakhs. Okay, against this, partners remuneration interest and all that under section 44 AD is not allowed. So 44 AD read with section 40B, no adjustment it is required. Okay, now I cannot straight away conclude the answer at this stage. Reason, there is a possibility that there can be some other sources income, there can be some capital gains transaction, there can be some house property income. So this computation is with respect to the business income. Okay, so I have to make a pause here and I have to understand first of all some of these particular basic provisions section 44 AD. I'll multiply with the turnover. So that is a basic thing which I have already done. Okay, 8%, 6% were appropriately through banking channel transaction and all that. Okay, now all the deductions of section 30 to 38 are deemed to have been allowed and no further deduction is to be given. So practically, see, business income section 30 to 36 are all deductions to be given. Even 37, 38 that we said that some disallowance. So that way this is section technically says 30 to 38. So 30 to 38, whatever the deduction that the business income can give it to you is all deemed to have been allowed. Depreciation also deemed to have been allowed. There is no need to do any business income adjustment practically. 40B was one of the doubt that also I have already solved, that no adjustment required by the interpretation which I have already explained that to you. But in the question you have to identify whether there are any other than business income adjustments. Okay, so even if you are following 44 AD, now see depreciation, that's okay, that is a business income. So right now I am thinking from presumptive taxation point of view. So I'll have to partners ignore, interest capital ignore, donation to political party. Okay, these donation to political parties 80,000 in cash, 70,000 by electronic transfer. So in the business income I will not do any adjustment, but I can give a chapter 6A deduction if I am doing total income computation of 70,000. So that is one of the point I will keep it in the back memory. This is little bit relevant. Okay, monthly rent paid to partner the premises of the Godown, this is also business income adjustment. Sponsorship fee is a business income adjustment. Then firm incurred 5 lakhs expenditure toward cost of gold coin awarded. Now that I think this is also business income adjustment only. Depreciation business income adjustment. Okay, one registered trademark firm used it. This is also business income, intangible assets, something like that. Turnover I have already considered. Now during the course of the assessment, now this another good point has come. Officer has noticed the transaction, it has asked for the explanation. A, cash deposit of 3 lakhs. B, one of the partner travel abroad to New Zealand for the business purpose. Now friends, I already told you that there are couple of judgments tribunals where they have already said that if the presumptive taxation scheme is applicable, then there is no need to give any such special explanation about cash deposits and this and that. Because, for example, if you say cash deposit, then 80% of that deposit is already multiplied. No, but then to give all separate explanation and all that, because it is a presumptive taxation. So in the presumptive taxation, the officer might feel that this particular figure is not able to explain, and therefore I make the additions under section 68. The tribunal said in presumptive taxation you should refrain yourself, you should not do that. Now this is one of the travel expenditure, because this is also linked with the business. So in the presumptive taxation, whatever that is linked with the business, for which you don't require any adjustment because all the deductions are deemed to have been allowed. So even the travel expenditure, this could be a situation of section 69C for disallowance of expenditure and all that, but because it is linked with the business, it is linked with the business purpose, no such adjustments is very much required on this particular front. Okay. Point number C, firm has made investment in the books, however firm stated the slump in diamond market, got a loose diamond at a dot cheap price 18 lakhs, however fair value is 22 lakhs at the time. Now this is your IFOS income. This is something which you have acquired at a less than the fair value. So this is jewelry. First of all, loose diamond is a jewelry by the definition. Okay. So even if diamond, there is a precious or semi-precious stones, whether they are studded in some valuable article thing, jewelry, or they are not studded, that means even if they are loose diamond, they are equal to the jewelry, and the jewelry you have got at the cheap price and 22 lakhs. So the difference can be added as IFOS income on this particular front. At the same time, friends, it can also be thought that this is unexplained investments. It is unexplained investments. That way also it can be thought of. Okay. So whichever way you understand, this is not what I'm trying to say. This is not directly in connection with the business. See how this point A and point B is different. Point A and B, it is linked with the business. Okay. But when it comes to point number C, that investment, okay, that is not linked with the business for which we are talking about a presumptive taxation. Okay, and there comes the real knowledge of the tribunal judgments, that in this point number C, assessing officer can make the adjustment. Now see, the firm is not able to produce detailed voucher. Now, if the firm is not able to produce the detailed voucher, then I can straight away say 69A adjustments. All these provisions. So, if you don't have even a documentary evidence, a detailed payment voucher and all that, so all these things can always become a doubt, and I will say that, okay, you can make the additions. Okay, so you have got 18 lakhs and difference is 22 minus 18, so 4 lakhs rupees. I can make the additions. Is that okay? So 4 lakhs additions will be carried out even if there is a presumptive taxation. Okay, so in the presumptive taxation, 5.2 plus 4 lakhs, that means 9.2. Okay, and from that I will give 80 GGA GGB, that donation to political parties and all that. So that was 70,000. Cash is not allowed. Okay, and difference is 8.5 lakhs is your income as per presumptive taxation. Okay, so that presumptive taxation is completed. Okay, now let's go to the normal computation, because in the given question you have to do the computation both the ways, and in the normal computation now you have to do all that adjustment 40B and this and that and all that, everything you have to do. One second, let me erase all that. Okay, now one second, let me, okay, start with profit as per P&L, 2.5 lakhs, add less adjustments. Okay, depreciation on generator and computers. Okay, this already debited credited, that means a book depreciation add and the tax depreciation less. Very simple one. So plus 1.1 lakh. Okay, and I think the tax depreciation somewhere was given. Depreciation on tangible assets is worth 2,37,000 500. So that also, if you want, you can do it together with that. Okay, so you can say that 2,37,500 will be less. This will be one adjustment. Okay, then working partner salary 30,000 per month for each of the partner. All the partners are working partners. Salary paid is authorized by the deed of the partnership. Okay, so there are 3 partners, Ram, Rahim and Robert. Okay, so partner salary is 30,000 per month for each of the partners. So 30,000 into 12 into 3. But now check whether it is for all the 12 months or it is the firm was formed on 1st of June. So 1st of June means April and May 2 months will not be there. So it will not be 10 months. It will not be 12 months. It will be 10 months. Okay. So in all it is going to be 9 lakhs. Add the entire working partner salary. Thereafter from the book profit we will give the deduction. Okay. Interest on capital 18% per annum. Total interest capital from debited to profit and losses 3,60,000. So fully add 3.6. Okay, first of all you add everything and thereafter we will see whether it is within the limit of 40B and all that. We will see. First of all you have to add everything. Donation to political party and this figure. Okay, so add 80,000, add 70,000. Point number 5, monthly rent paid to a partner Ram for the use of the premises. Now this is one of the very valuable point. You are paying a monthly rent of premises as a godown. 30,000 is occupied from 1st of October. The market rent of the premises ascertained is 15,000 per month. No tax was deducted on the rent paid. Okay, so in this particular case, whatever is rent of this particular godown, it is first of all a related party transaction. That is one of the point because it is paid to the partner. Okay, and market rent is only 15,000. So related party transaction, first of all the disallowance will come into picture. Okay, and let me check that how much it comes from 1st of October. That means October, November, December, January, February, March. So it is 6 months. Okay, 6 months into 15,000. This is a related party transaction and 90,000. So add 90,000. Okay, now remember one thing, this is a rent paid to the partners. It is not a remuneration which is given. It is not the remuneration which is given. It is a rent paid. And therefore, section 40B will not have any effect for this particular transaction because it is not salary, bonus, remuneration, commission. It is for the use of the premises. And therefore, section 40B will not have any effect. But that related party transaction disallowance will come into picture. And that we have already done, add 90,000. Point number 6, sponsorship fees local to 4 lakh rupees. So this sponsorship fee is basically a revenue expenditure, maybe something like an advertisement expenditure. So you do not require any adjustment. No adjustment required. Point number 7, firm has incurred 5 lakhs by way of expenditure towards the cost of the gold coin. Okay, awarded to the customer on the first day of the showroom inauguration. So this is basically a sales promotion kind of expenditure. Cost of each gold coin was less than 10,000. Okay, 1 coin was given for each buyer on the day selected through lucky dip. No tax was deducted. See, on this particular case, you don't even require to deduct the tax. It is not a lucky draw. See, if it is a lucky draw winning from lottery, then TDS provisions can come into picture. But this is not lottery. This is only a draw. Okay. So that is one of the debatable point in the TDS chapter. That can I say it is a lottery winning and the TDS will be applicable? No, this is not a lottery winning. This is only a sales promotion scheme. So on this particular case, the TDS, you cannot say that there is a non-compliance. That means everything is okay. Nothing is a non-compliance. Okay. And the firm has incurred 5 lakhs of the expenditure. So you don't require any adjustment because it is anyway a allowable item. So no adjustments. For this, no adjustment is required. Okay. The additional information, one registered trademark. First point I have already considered. Registered trademark, that means intangible asset on 10/7 for 3 lakh of rupees. Since there was some dispute on the title and was cleared through court decree only in the month of the November. So this particular amount of rupees 3 lakhs, which is trademark acquired on this particular point, can be subjected to depreciation on intangible asset. That can be a possibility. Okay, so 3 lakh rupees, okay, multiplied by, because it was on 10/7, but you are put to use only in the month of December. So it is 25% and half the rate. Okay, so just check how much it comes. Okay, this will be the depreciation on this particular front. Now I'm not going to add 3 lakh of rupees separately because it is in the additional information. That means 3 lakh rupees is not debited credited to the P&L. So I will have to only consider the depreciation effect on this particular front. The total turnover I have already considered for the presumptive taxation. Now come to point number 4. Okay. Now in the point number 4, assessing officer can use full powers of section 68-69 as per the case laws. So he can make these particular additions, these 3 lakhs he can make the additions. One of the partner in New Zealand, this was a business travel and there is under reporting. So you can also add 2 lakhs of rupees. However, the same 2 lakhs rupees cannot be allowed as a reduction. 69C already explained that in the past, that the expenditure which is allowed by virtue of section 69C cannot be again to be given as a deduction. So same expenditure to be given deduction, now it is not possible. So add 2, and anyway this particular difference of 4 lakhs also you can add, okay, unexplained to that particular extent. So plus you can add 4 lakhs of rupees. Okay, all the additions on this particular front can be easily carried out. Okay, but this will be your basically your IFOS. Okay, so take this particular figure as your IFOS. Now just take the total of your business income, and of that first 3 lakhs 90%, and above 60%, and before that you do the interest adjustment. Okay, so now interest adjustment, let me check. Interest on capital, okay, interest on capital was 18%. Okay, and it is already authorized and everything is by the partnership deed. For interest on capital also they should have separately mentioned, but I will say that anyway it is authorized. So I have already added 3,60,000 full. So what I will do is 3,60,000 multiplied by 12 divided by 18. This will be allowed as per section 40B. So 2,40,000 I will deduct on account of interest to the partners. After deducting whatever is the book profits, first 3 lakhs 90% and above 60%, that will be my limit. And actual working partner is full 9 lakhs, and all of them are working partner only. So it is entire 9 lakhs which I have already clarified. And don't forget that this was only for 10 months calculation because firm was formed only on 1st of June. Okay, so that is going to sum up when it comes to your section 40B adjustment. Now friends, one more extra point that you have to remember very carefully. When it comes to the tax liability calculation, I think that question is not asking us, but I will of course like to bring to your attention the tax liability calculations. All the incomes which are covered by 68, 69, etc., that is a deemed incomes, that is subjected to a special tax rate of 60%. Okay, all 68, 69, etc. incomes, it is multiplied with 60% plus there is a special surcharge of 25%. Somebody also said that effective tax rate is 75%. Okay, so when it comes to the tax liability calculation, this is one of the point that you have to keep it in your back memory. That is one of the point. Okay, together with that there can also be the penalty discussion with respect to the deemed incomes, but this question is not asking you. But where assessing officer has made the additions, then 10% of the tax on 115 BBE income, that is your deemed incomes, of that 10% can be a penalty. Okay, where you yourself has not disclosed this in the return of income. Okay, so this is the advice that you have to give to the assessing officer. So this particular question is asking you the advice, no? Your suitable notes and suitable advice given to the assessing officer. Okay, so to the assessing officer you will say that you are making the additions of 68, 69, and therefore the penalty of 271 AAC can be applicable, which is equal to 10% of the tax on this specified income. That is one of the advice that you have to give it to the assessing officer. Now another advice which you can give it to the assessing officer is this particular point. However, now for that I always have a double mind, but I will give. Okay. See, on this particular point, this cash deposited of 3 lakhs of rupees. Okay. So these 3 lakhs of rupees I have already added. These 3 lakhs of rupees I have already added. Okay. But there can be a possibility that because it was deposited in the bank passbook, it was already included in my profit as per P&L. Or that means it was already included in my books of accounts. There was a possibility. Okay. So if I assume that these 3 lakhs was already included in my taxable income, supposing, then I have to do only that head adjustment, that from the business income I have to move it to the other source. So I'll have to do minus 3 lakhs from business income and then add 3 lakhs to the other source income. That is another possibility, but that will be never clear in a question like that, because I have to then go into the actual transactions whether it is 3 lakhs already included in the income or not included in the income. So for that I will just show the presentable answer, but one different thought on this particular front that will be applicable. Okay. So accordingly you have to give the answer.